As you can see here, that there's a significant tax savings by having the company as part of the overall group structure. So incorporating a company into your group structure can offer significant benefits if you're a high net wealth individual or if you're a high income earning taxpayer. So companies allow taxpayers to basically apply a flat corporate tax rate on any income generated from crypto activities, consider any capital gains or profit transactions, passive income. If there's a bit of that, then it may be worthwhile putting those assets into a company. They're really ideal for trading activities mainly, or where the assets are held for less than 12 months. Seeing as the company is not eligible to apply the 50% CGT discount, it's not recommended to have a company just to hold long-term assets. There's, I think, more efficient structures that offer better benefits than a company would in that instance. But companies can also benefit family groups by basically retaining profits and only pay dividends when there is a tax saving opportunity. So taxable income levels might be quite high for a number of years. When they start to get a bit lower, then it would be beneficial in that instance to then pay out dividends. Some of the cons though, it's quite a complex entity. There's additional regulation. So companies are governed by the Corporations Act, which encompasses the governance of companies. It's essentially a blueprint on how a company needs to operate. And it also has pretty significant directors' duties. And if there's any degree of neglect by a director, they can be personally liable as well. So very important to have continuous ongoing advice by a tax agent to ensure that you're ticking all the boxes and you're not caught out in a situation where things can go pretty south. So in this example, the company here is being used to carry on crypto trading activities. So a pretty textbook case. It's done so pretty successfully. There's a reported generated profit of $250,000. We're assuming that there's no tax reconciliation adjustments here, and that is what is reported as taxable income as well. So the tax payable by this entity gets isolated because it gets assessed separately, as opposed to a trust, which has to distribute any taxable income to the beneficiaries, and then the beneficiaries are then assessed. We have an individual in this family group, high income earning individual, who's generated $180,000 of employment income through the year, and also has some capital gains on crypto, which are discountable by 50%. We're assuming that deductions are already included. There's no other income, and we're only considering the income tax payable, no income tax offsets or any levies. But further breaking it down, the company is going to pay a flat company tax rate. We're assuming 30% in this example, and the individual will be assessed at their respective marginal tax rate. So that's currently exceeding the 45% threshold. As you can see here, this is total taxable income for the individual A, $215,000. So the subtotals here is that the company is ultimately going to report income tax payable and have a liability of $75,000, whereas the individual is going to have a liability of approximately $63,000. So the total tax on all this income is $137,000 or $138,000. And if we compare this to individual A, who doesn't have a company, the exact same situation, he's trading and there's some capital gains transactions there, which technically you can do both. The total taxable income that he's going to report in his tax return is $465,000. And he will also be liable for an income tax liability of approximately $180,000. As you can see here, that there's a significant tax savings by having the company as part of the overall group structure, because any dollar that he's earning over that, what he's already earning, is going to be taxed at about 45%. So if we can get that down to 30%, then it creates a pretty significant tax saving opportunity for the taxpayer. Partnerships can also be set up by a verbal arrangement, or a handshake agreement is what is frequently referred to.